All right, highlight for Thursday. We open up on a limit down, and we still can't rally. The highlight for me today, is like I've been saying, is the downside's the right side. You can't spend all this time at extraordinarily cheap prices or lower prices, and if they're not being bought, then they're not cheap. So we're down 1,500 Dow points yesterday. We open up another 1,500. They're down over 2,000 points in the cash. You've got the E-minis down 227 points. They were down that almost yesterday. And just because it's lower doesn't mean it's cheap. If it's cheap, buyers come in. So when you're not seeing buyers come in, you get this, you're just hanging on the edge of a cliff, and you run these things to limit. Now the next limit down is 23.82 even in this March contract. Also, you have to remember that tomorrow you should probably roll into the June contract for not only equity futures, but currency futures, and the rest. You should already be in June for treasuries. The other thing I made note of is even though you're getting downside in bond prices, this is a really big move lower in the 30-year. This is a nice move lower down here in the yen. You're not getting upside in stocks. That's scary because look at them just trade. This is the limit down. This is the gap open back lower. They're not able to get above anything, 2601. They're just trailing lower. This sell-off should have stock prices maybe 100 points higher. That's scary. Lower prices are not leading into cheaper prices. When they get cheap, buyers come in. So you might have to wait for what we call a tape bomb out of Washington with details of what they put together. Pelosi's talking to the Treasury Secretary, Mnuchin. But it has to be something the market doesn't know about because it knows about what they're trying to do. And we're still down here. The unknown, the uncertainty is an absolute stock market killer. There will be big rallies at some point, but it's got to be something it doesn't know about. It's got to be something positive out of Italy. It's got to be something positive out of South Korea, some countries before us that are hot spots that have big turns based on what they did. This stock market does not want bigger parts of this country to do what they did in New Rochelle, suburb of New York City. They don't want that. Because as it is now, with all the canceled travel going to Europe and all the social distancing that's become a catchphrase, it's locking up restaurants in the service. It's money you don't get back. So it goes from a bad quarter to a bad year pretty quickly. And then you have a presidential election that they're also pricing in. If this was a year ago, maybe, but now we're 7 months from election cycle. The market doesn't want the uncertainty of a new administration. We've said that all along. It's not a Republican or a Democrat. It just likes certainty, and a new administration would be uncertain. So it's pricing that in, believe it or not. And now you got bond prices going lower because I don't think people want to own anything, right? And so you get into even at oil prices at this point rally, and we couldn't take a jump from it. There was a good spike in here off the bonds. It was even before here. I'm not going to pull back. Mostly what I try to guide people through, including myself, is just to think out loud, keep people calm, objective, and if you got losers, they got to be, doesn't matter if they're small or big losers, quick ones. All right? If your winners are quick, you got two of them, then you can get the runner for 10, 20 points. But if you're going to look for a big winner, you're going to have to risk more. And you got to keep them in tandem. But quick winners and losers, because you could have a 7, 8 point S&P winner turn into a 7, 8 point S&P loser in one sweep. While these markets aren't moving as fast as I've seen them in the past, it's a controlled kind of volatility. Which to me is scary because they could just run after these things with all these prices. We're in the 2,500 handle. We are nearly 1,000 points, S&P points, below where we were at our highs. All right? And people aren't running in with upside. Take a look at this chart. This is a daily. This was the first leg down. Then they come up, and this was Italy. And then they come up when Trump said that we could do this, that, and next day took it all back. Look at this, 2,500 handle from 34. It's almost 1,000 point S&P move. So forget about the percentages. We're down 25%, 35%. We can make that back up in a hurry. But the unknowns and the uncertainty have to become knowns and certainty. So stay calm, manage your losers. It's not how much you make, it's how much you don't lose. And if you struggle trading before in normal markets, these aren't the markets to trade. These are the charts and the ancillaries to work on. You want to work on becoming a better trader and you hadn't had success before this volatility, don't try to trade this volatility. Try to understand and sharpen your predictive skills as what's moving what. All right? Where could the breakouts happen? Get your consolidation boxes. Is it a surprise that when they take out these lows, they go, right? Or take out these highs, they go. Find those boxes. Find those breakouts. Work on things like that. Create and document some confidence, build momentum, build some confidence in that your correct calls are not good guesses. They're probability stuff, all right? And then pay attention to some headline. Pay attention to headlines because they are going to move us. Anticipate before you participate. And most importantly, manage the you-know-what out of your risk. You got to know where you're going to get out before you get in, especially for losers. I think you get the NHL comes in and they suspend their season, their term, that might be a little bearish, but not that much. Other stars or notable people get this, especially in Congress or in Washington, we go down, knee jerk. Those are comments to anticipate. I seen the senator from Florida was talking on Fox News last night. He sneezes during the interview, and I look at his eyes. I said, this guy's sick. If he's got a coronavirus or not, but he's sick. If he was my dad, I'd tell him to go get tested. And then I think someone just said it in the group. If you got Sierra, you got Ninja, you need the Verbal Journal. Go to the Verbal Journal trading.com website, buy it, and get it. It's only for Sierra or Ninja users, but get it to plot your dots as to what you're thinking. Go to that website, verbaljournaltrading.com. You'll know what I'm talking about. It's cheap, and it allows you to really sharpen your predictive skills. Manage your risk. Talk to other people during and after trades. Don't be lonely. And don't ask yourself why. The more you should ask why, but if you're asking yourself, why did this happen? Why did that move happen? Why did that move happen? Then you're missing a lot of stuff. You want to minimize the times that you didn't know why what happened. Guys, I got the free link. Good through tomorrow. Come back and we'll do this again. Hey, if you close your eyes and in 2 hours we're trading the 23 handle, don't be surprised.